Let's have a conversation about some of these topics. Let me start first, Nick, since I know you talk to many financial institutions about uncertainty. Do you recognize what Jens is talking about, or is it different in the venture capital industry in Silicon Valley? Do they, in fact, love uncertainty? Or is this the typical, Jens is concerned about it and takes action to avoid it and handle it? Is that more typical in your experience?
Yes, I'll give two answers. One reflects very positively on Jens' management style, actually, which is the problem at Silicon Valley Bank, and then I'll talk about it more generally. So there is a pretty broad conception, and I've talked to a number of people in SVB, that the problem with SVB is it was fully remote in 2021. So I'm not sure how much people know the history of Silicon Valley Bank, but basically the bank is excellent. If you're a startup in Silicon Valley, I worked a lot of startups, it's used by all of them, it's still beloved. It's called Silicon Valley Bridge Bank, it's still ongoing when it's in insolvency. The problem was it had its treasury thing whereby it invested very, very, very heavily in low-yielding assets, which were lost money when the interest rate curve started going up. And somebody in the bank must have realized that this investment strategy was risky, because they had no hedging. It was basically one big bet on the Fed not putting up interest rates faster than the market was thinking, and that happened in early 2022. So the inference is, during the year of 2021, when they were all fully remote, they were having meetings on Zoom, and there were folks that probably, if it's Seven and maybe, I don't know, me or whoever it was, if Jens was the CEO, weren't comfortable. So we're thinking like, this isn't right, we're like extremely risky, but somehow they didn't feel able to speak up. And you've heard this stuff is leaking out. There were people in the firm that were not able to speak up. They're on Zoom, they're not meeting. If we were like in person, you may walk out and go grabbing coffee and say, suddenly, I'm worried about this. I think this is an issue. The Fed raises rates more than this, our balance sheet has collapsed. That just didn't happen. By the beginning of 2022, the bank was sunk. By this point, it was just dead, and it was kind of, it was dead man walking. And so the critical thing that Jens pointed out, which would have solved SVB, was having a process whereby people push back and make in person and say, here are the issues. Because if that had happened, I'm pretty sure they wouldn't be in that situation. So that was a governance failure. And it was explicitly not thinking about risks. There's a risk that multiple people must have known. Because it's not complicated. These are not complicated risks. So that was one. The other thing is, it's interesting when you're in the Valley, venture capitalists really like funding in startups with lots of upside risk. But that's kind of equity investment for little companies. On the other hand, what you don't want to be doing is having a countrywide whole financial system that's incredibly risky. So risk isn't always bad. So again, startups are great. If you see two startups, you basically equity investment, one has higher variance, same mean you always go for the higher variance ones.
I think the key point is to hire people that are smarter than yourself. For me, that's easy to find people that are really smart and go after you. That's the key point. Some people also think, which is weird, is that they think the difficult thing is changing your mind. I mean, if you're a CEO and say, we're going to go there, and somebody comes up to you and say, that's really stupid, why should you want to go there? The exit is over there. I mean, change your mind. What is problematic with that? The real difficult thing as the CEO is basically if you say, well, let's go there because that's the exit, and somebody points the wrong way and say, that's the exit, then how do you encourage people to disagree even when they sometimes are wrong? That is the difficult thing, because you don't want to sort of, boom, that was stupid, because then they won't come the next time. And that is the idea, create such a landscape. The problem is, of course, in this sort of system is that sometimes you're a little bit slower. In the sense that, okay, so we need to sit down. Yeah. But that is the way with Sweden. We have one thing I think is underestimated when you talk about Sweden is the corporate governance model, with the clear AGM, with the clear board, and with the clear management responsibilities. And have those, the sort of trinity there, when you discuss this all over and it's not clear. I mean, if I do something wrong, my chairman would fire me. I mean, nothing problematic with that. And but in the US, what you do is you merge these two, and I think that's wrong. It's good that you can take fast and quick decisions, but what if you're wrong?
Yeah. I'm happy you mentioned corporate governance. Yes, that will be the topic of next year's Swedish House of Finance annual conference.
But that's no longer uncertain.
Now that I reveal it, no, yes. So you mentioned the financial system. And you spoke a little bit about what Swedbank does to be resilient to risk and uncertainty. Where do you feel the financial system in Sweden is? Are we doing okay?
Well, I would say the financial system, it's sort of first, it's never stronger than the weakest link. And you could find problems in the Swedish financial system. There are markets that are not as functioning as you would like them to do. But you see sort of a pattern where things are evolving. And I think the Swedish FSA is sort of very risk-based on their approach, going after where they feel the biggest risk are. But the good thing is that we have well-capitalized banks and they're profitable, and that means that they are in a good position, because usually sort of if the banks do good, then what happens is that it creates stability and also make sure that the economy runs well, because we all know that research shows that whenever there is a crisis in the credit system, those crises are much more dangerous for society and growth. And if you read Adam Towson, for instance, is very clear that in the end, it was sort of the start of the Trump era is sort of TARP and what happened there, so global financial crisis. So there is a clear link between if the financial system goes bad, the economy goes bad, brings up bad policy and more divergence and more crisis.
Great. Okay, we have about 14 minutes left, and so hopefully we have time for some Q&A with the audience. So you all have microphones, I think, on your chairs. Just put your hand up. And by the way, Jens is the CEO of a public company, and so he has the right to decline to answer questions. Yes, please.
I would like to comment on your analysis of uncertainty in the financial markets. I'm not sure you talked about uncertainty. I think you talked about risk. And we know since Ellsberg's famous experiment that there is a difference between them. And recently there has been a lot of work distinguishing between uncertainty and volatility. You showed us measures of volatility, and uncertainty is about not knowing the distribution, the underlying distribution of the asset. And there has been recent paper in JFE, for example, showing that stock prices react differently to changes in risk of VIX and changes in measures of uncertainty, which are derived from estimating the uncertainty in the distribution of intraday stock prices. So does your analysis distinguish between the two? And second comment I have about the rise in uncertainty, maybe overall uncertainty is derived from newspaper articles. Maybe what you're tracking is changes in culture rather than in uncertainty. Newspapers now, or newspapers reporters, write differently about political matters or other matters compared to many years back. Just to illustrate, in World War II, they suppressed their reporting about problems out of patriotism, and now, of course, they'll bring it out to the fore. So I'm not sure about both measures that you showed us, that they really track what you think they do.
Sure. So going through the points in order. So there are differences across literatures, what people call things. So in some finance literatures, you're right. So let's step back. There's two different basic measures. One, classically, you go back to Savage in like the 30s and 40s, was called risk. So risk is you know the outcomes, but you don't know which is going to get. Think of rolling dice. Rolling dice is risky. It's a 1 in 6, a 6, a 1 in 6, a 5, a 1 in 6, a 4, etc. So you have known outcomes, probabilities against each. Back in that literature, uncertainty was when you didn't know. You're given a dice, you've no idea how many sides it is, you can't look at it. It could be any number of sides. It could even have like hundreds of sides. What is the probability of that? Well, that's more like uncertainty. You really just don't know anything at all. And that relates to kind of known knowns. That's part of why I put it up, known unknowns, unknown unknowns. For practical reasons, if you look at what people talk about, they generally talk about uncertainty. Now, I know we can go back to the maths textbooks, and in the maths textbooks, there's a distinction between uncertainty, risk. When I talk to companies and talk to firms, which I do a lot, and people trading, etc., they generally use the word uncertainty. My main objective is to communicate rather than just stick too closely to original maths. So I go with the most common words, particularly for newspapers. To be honest, I work on something completely different, work from home. It's a big issue in work from home. I get that of people that work from home, not everyone does. Some people work in a cafe or a co-working space, but it's just become called work from home because it's easier to talk about it. So you are right, and particularly for the VIX, there's implied vol, and there's the risk component, and Burkhardt and others. I'm not against that literature at all. I quite like it. It was just, I was synthesizing for a big general audience and going with just the most common terms that most people understand. I don't think the differences are that great. 90 and uncertainty, where you really don't know anything, I've been looking at data, it's quite hard to find. So for an example, take 9/11. After the towers went into New York, they stopped trading the VIX. The VIX was not trading. It was illiquid. There was no pricing because they closed it down. So then you think, well, this is 90. If you look in Europe, the European exchanges were still trading throughout the events, and prices were being set. They were higher, but people were still buying and selling. So it's actually quite hard to find somewhere where people are not prepared to put money on, which therefore means true 90 uncertainty. When it's really, there's no probability distribution, it's actually pretty scarce. So I think, I'll stop there. It's more, I get that it's the mathematical distinction, but for a common audience, my aim was to try and use the best and most commonly used words. On the second point, you talked about newspapers over time. I totally agree. So I'm not disagreeing at all. Newspaper words changes. In fact, a historical index that I didn't go through the details adds in a couple of words, adds in words on trade, and adds in words on war. You've actually got to be really careful on war, because mostly war in newspapers picks up trade war, not military war. So our words were like military and battle. The word war is actually not helpful. So you'd think it's like an obvious word, but it's drugs war, trade war. So actually it's not one of the term sets. And yeah, another good example is we also added the word commerce. So everyone thinks that, we call it economics. If you go back to the 30s, it was home economics was the most common use of the word. So at high frequency, these terminology uses are pretty stable. But at low frequency, you definitely have issues around that. So yes, I have discussed offline, there's lots of nuances. Newspapers are pretty good, but there are problems with stability. I would say most American newspapers are stable from about the 80s to around now. They're really changing now. When I talk to newspaper editors, they no longer focus on the daily print. I don't know if people know, but the New York Times and the Wall Street Journal does not have a daily edition. When the article's ready, it's just posted, that's it. So, and the daily edition is reverse, it's the residual. It just looks at when the thing has to print what's up, then it takes all of it. So, because I was asking a journalist, are you going to wait for tomorrow's edition? And she was like, no, we just post as soon as it's ready. So yeah, we've moved away from the daily news cycle. We're now 24 news cycle.
Yes.
Question. I did not see climate up there as an uncertainty. Could you comment on that? And maybe also Jens could comment for your business on that uncertainty.
So I'm happy to practically go and then go to Jens. So climate's a huge issue. I mean, it's a huge personal issue. Just last weekend, in our backyard in California, 2 of the mature trees have died because basically they're poplars, and it's got hotter and there's less rainfall. And the arborist said it was climate change, and it's true. And so it is permanently affecting all of us. I totally believe in climate change. It's harder to measure. Having said that, the DMP in the UK, the Decision Maker Panel, has now started to put in waves of climate questions. It's actually quite hard to measure. So what we're asking firms is, has climate change affected you? And are you taking actions to affect climate change? They look quite different. So on the first is, have you changed opening hours, locations, trade patterns? The second is, have you put in carbon capture? Are you changing energy sources, et cetera? And we're on our second wave, so we do it every year to try and benchmark and build this stuff up. But so we were thinking in our minds, Brexit was the first big topic that raised the Decision Maker Panel. Then COVID's been the second big topic. We think climate is probably the third big topic. It's growing slowly, but that's where we're kind of focusing on. Brexit's like one of those monsters from those horror movies that just never seems to die. It's like, you think it's dead, then it climbs out of the bath. So once Brexit is gone, it's like we have so much real estate in the survey, we're starting to fill that up with topics around climate. So yes, I totally agree.
What strikes me about the climate is a few things. The first one is that if I meet a CEO of a company and sit down and talk about the business, I would say about 70 or 80% of that time is about the climate. When I sit down with somebody who works in politics, it's 10 to 15% of the time. So the key point is that this started as a political issue, but now it's totally business. In the end of the day, if you don't focus on the climate, you are dead, literally. And that means that you cannot hire people. You cannot have a decent dinner with your kids, because if you cannot defend what you're doing at work, you cannot do that. You cannot sell to customers. You cannot deal with the regulators. You cannot deal with media, and you will also lose money. And that means that, I'll just give you an example. We don't lend out money to new oil tankers. We don't lend out money to new oil drilling in new sort of oil fields. Why? Because we think it's bad, a little bit, but the key point is we won't get our money back. And in the end of the day, we want our money back. And then we work, of course, with Mark's task force for climate-related financial disclosure. Everybody's working with that. So it's really on top of that, enormous business opportunities. And what scares me is a bit is that you see this polarization. You're making it political rather than a sort of a science-based question, because the science is there and the companies are there. Now some politicians are trying to find a political divide and a political debate, and that's what scares me.
This sort of we are running out of time, but we have either 2 or 3.5 minutes, depending on which clock is correct. But I thought a good point to end was to ask you, Jens, to think about, or tell us a little bit about what kind of uncertainties matter for Swedbank, in your opinion, or for the financial system going forward. I guess you already told us about one. Are there other kinds of uncertainty that you think about at the bank, that we should think about at the national or global level?
What you do is you try to really scan the area. And one thing that sort of I think is not really started to be discussing yet is sort of China. And both the economic consequences was ongoing now, the weakness of the economy, but also we know that when there's a weakness of the economy, what could happen is you can see sort of other types of aggression. And I think one thing you should do is play around with the idea of what would happen if you see something similar that happened with Russia and Ukraine, and you would see the same consequences in terms of closing off China. What will happen with everything? If you just look in your in your office space, or what your input in, what can you take away there that's Chinese? It's really hard to do, and in the end it's really frightening to do that, because you see there are so many weaknesses. But start thinking, don't avoid tricky questions, because it's up there. So that's one thing I would think a bit more about. And then the key point for me is, and there I turn sort of, take my old econometrician hat on, and I tend to think on the shadow price. What you do is that you look on all the risks, and for me, you try to risk mitigation so that the lambda is similar all around, so you have the same shadow price. That is difficult, of course, because there are so many things you can't control and so many things you need to do. But for me, that's a way of living, a way of thinking, that there are all these new risks, and once again, discuss. In the end, when corporate governance, I give you an advice for next year, Sjöstrand's book is really good. And when he talks about the Swedish model of running companies, his key point is that Swedish companies are run through discussion. And that's sort of, you have in the US, you have financial incentives. If I were the CEO of a bank in the US, I would have financial incentives. Now, you don't have that in the same way. The key point is have an ongoing, frequent discussions. That's how you run a company. And be challenged the whole time.
That's great advice. Thank you both so much. This has been very enlightening. We have a half-hour coffee break.